Morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with Kevin Casey. And today we are joined by one of my favorite people, Chika Sunquist, DRE Commissioner. She is a delight. Welcome, Chika. How are you?
Great. Thank you so much for having me. Really appreciate it, Kevin and Audrey.
Our pleasure. Okay, before we get off and running, a few things. Number one, we have some other reports coming out this week. Wednesday, that'd be tomorrow, we have mortgage applications, new home sales. Thursday, we have jobless claims, durable goods, existing home sales, final Q2 GDP. And Friday, last but most certainly not least, the Fed's favorite measure of inflation, PCE. So there's all sorts of projections about what that might look like. I am not even going to talk about it because God knows what will happen between now and Friday, and it could be anything, and it is what it is, and we're just going to move on from there. So, also today, interestingly, because we know we had the Fed decision last week and they lowered 25 basis points, and almost immediately the mortgage rates went up. We were not surprised because we expect that now, but the rest of the world was shocked and confused. So today, after like the most incredible procession of Fed speakers, the 10-year treasury is down to 4.11. It was 4.13 this morning. And so I don't know.
That's not down. It was 4.04 last week.
Yeah,
That's a
that was
long
the
way.
well,
Like,
okay, but October, not quite there. August 22nd, it was 4.33 and mortgages were 3/8 higher than they are today.
I'm still not happy, but that's okay, whatever.
I know. Well, okay, this is my point exactly, Chica, just in case you haven't heard me rant and rave about this particular subject, is they keep saying, oh, if just the rates would come down, if the rates would come down, if the rates would come down. And you know what? It doesn't freaking matter what the rates are. No matter what they are, everyone wants them to be lower. So it's going to be whatever, you know what I mean? Like the more, if they're 5%, which is what everyone is dreaming of, then they're going to want 4.5 or 4 or 3 or whatever.
Or 1.2.
Yep.
Right, exactly. And so, for instance, Fannie came out this week and revised their rate projections to 6% by the end of the year, but I locked in 5.99% what, a week ago or something? Before they, lowered their Fed funds and the rates went up. So anyway, we already have rates with a 5 in them. And so those exist, and that's great. And certainly people are excited about that, but is that going to make them buy a house versus not buy a house?
I think some people are actually out there calling right now and getting lots of calls. And I think it's just because they hear the Fed is lowering rates, therefore oh, well, then rates are lower. Now, can I do anything for these people? Not all the time.
Yeah.
Like I had one I was just working on this morning. Oh, we want to lower our rate, our payments are too high. And I ran through all the numbers. My final analysis was, I think you need to sell your Porsche because
Yeah.
that is a big chunking payment you have that you could get rid of easily.
Yes. When people, okay, Chica, again, another one of my rants. As people are talking about affordability, housing affordability, let's talk about car payments that have an average payment of over $700 a month. Do that times two. And then there are 20% of car payments that are over $1,000 a month, 20% of them. And that's before you even talk about what does it cost to put your kid in childcare.
Mhm.
I mean, and how much do you spend on eating out? So all of this talk about, oh, an eighth is gonna a quarter, a half even is gonna make this huge difference. It does make a difference, but it doesn't solve all the problems. And then Michael here has a great comment because insurance, insurance.
Yep.
I mean, so okay, so they canceled my insurance last summer because I have trees in my yard, like 12 redwoods in my front yard, things like that. Um, I just, I really didn't pay a lot of attention to what the new number was because you're just so desperate to find insurance. You're like, whatever, right? I just saw a side by side because I kept saying, oh, it went up some, but it didn't go up that much. Oh, it was in the 2000s. Now it's in the 3000. It almost doubled. I didn't realize it almost doubled. I'm like, ugh, geez Louise, I just paid it and holy smokes. So anyway, also, Chrisman Marketplace is a great resource for all things mortgage. So make sure you check that out. Go to the NMLS website ahead of time. Go now and see whether you need a credit report, new fingerprints, a background check, any of that, because the deadline's coming up. We're teaching NMLS live all over the state of California and wherever someone might want us to go. And you want to not just get your education out of the way, but also make sure that you're ready to go when it's time for renewals in the beginning of November. And then finally, last but not least, before we get to lovely Chika, November 4th, we'll be in South San Francisco with camp. We're going to do our show live from there. That should be interesting. So, Chika, let's talk about what's going on in the wonderful world of not just California, because you talk to commissioners in other parts of the country. So let's talk about what's going on out there with real estate, with compliance, with audits. What are you seeing? Let's walk it through, shall we?
Seeing everything. I think for us, the most concerning thing is that is what exactly you started with, just the dynamics of everything, things changing, going up and down, how it's reported, how it's portrayed, how it affects consumers and their mentality. And so as a regulator, obviously we stay in our lane as best as we can of regulating the industry and making sure consumers and licensees are aware of what the law is, but we also have to take into consideration what's happening outside of that in the economy, in the spectrum of real estate activities, because that affects what the consumer experience is, and then what licensees do to bend the law a little bit or to skirt around it or try to figure out a way to
Ignore it
scam a
completely.
borrower. Sorry, Casey. Yep.
I said, or ignore it completely.
Ignore it completely. So it's hard for us to, track. We're not economists like you had in your last show, Dr. Hap. So we're trying to be creative and thoughtful about what's the next consumer issue, while also understanding, and maintaining the compliance with current law. But I mean, gosh, scammers just get so creative. And so we have to be reactive when it comes to that, because we're not as creative as scammers are. I mean, I just heard one. I don't know if you heard about the tree scam. You just brought up trees, where someone will pose as a fake agent or pose as a homeowner, and then they'll call a tree company to cut down trees. The tree company will quote a price, and then they'll come cut down the trees, and then the scammer will pay them a fake check over the bid amount. And then they'll say, "Oh, we overpaid you by $2,000. Can you pay us back the 2,000?" So they get back 2,000 or whatever the amount is from this poor tree company that's done a ton of work. I mean, these are all things that I never would have thought of to do. But, it's just reacting to new scams time and time again, and then reacting to the old ones, the wire frauds and the identity theft of, vacant homeowners. And so it's just trying to keep up with creative,
No, they're
creative
getting very
mentality.
creative. I had one last week where they said they were an escrow company. Here's your escrow documents, but it didn't have a property tied to it or a property name to it. It just said escrow documents. But some real estate agents are terrible. They don't tell us when they go into contract. All of a sudden, I know they're working on a client, they're making offers, and then they don't tell us that they've gone into contract, which just drives us nuts. Because then they're like, "Well, you had a week. Why have you done anything?" I'm like, "Because you didn't tell me you were in contract. How's that?" But anyhow, I get this thing. I knew the clients were about to go into contract, so I was like, "Oh, here it is. Oh, they made into contract." I almost clicked on the attachment. And then I thought, wait a minute, let's hover and make sure this is coming from a reputable company. I was like, wait, I don't recognize this company at all. And I chose not to. And fortunately, it was a scam.
Oh my gosh.
Did
Well,
not
good for
fall for
you.
it, but they're getting closer and closer.
I get a lot of that. I get a lot of emails that look like they are a contract or some sort of communication from an escrow company, and I just ignore them. But I mean, I don't know. Kevin and I teach NMLS, and we have to go through these whole sections about all these different scams, and people are angry because they're like, "Well, what do we do?" And I'm like, like,
your best.
know,
I mean,
like,
really.
educate your borrowers as much as you can, be the expert, make sure that you are the one that is telling them, look out for this, look out for that. I mean, yeah, but it helps for us to hear different things. Like, I've never heard of that tree scam. That's ridiculous. And who doesn't wait for a check? Who, first of all, who pays for the check? I don't even own checks. But secondly,
You know,
who doesn't wait for a check to clear?
I would the same thing.
Yeah.
Okay, so if I was a tree company and someone did that, it's like, well, oh, well, I'm gonna have to make sure the check clears, number one. But number two, I was thinking Chico was gonna say, oh yeah, they call and they say cut down my trees, but they're not their trees that they're having cut down. They're their neighbors' trees that are blocking their view or something, and they pretend like they're the borrower that or the homeowner. And the tree company comes out when people notice they're on vacation and all their trees are gone. They come back and there's a bill for it.
Well, and how devastating would it be if I came home and my 12 redwoods were gone? I mean,
Yeah,
it would be horrifying.
Mhm.
So it
I
is,
was actually I had a huge tree fall down recently, and it was $5,000 just to clear the tree out of the road where everything fell and everything. And I was amazed. They just come, they do the work, and they don't require payment up front or anything. It was like, wow, that's amazing. So. And
Well,
I
they
mean,
may have to change
that
their
was a
business model,
huge,
which
that
is
was 4 different trucks with equipment being towed behind each one for all the different things they were doing, the cranes and the chippers and the other stuff. There was some other machine they had. I was just like, holy moly, this is like a big project. So
so what else are you seeing, Chica? I mean,
Um, I think one thing that we're interested in learning more about is technology. We hear more about, less consumer harm, but more licensees using it. And, most tend to have a very conservative approach to technology. You'll kind of learn about it and maybe try it once and then step back and go, this isn't for me. I'm not comfortable yet. But then you have people that just dive in and don't really understand the human to human protection element that needs to come with using new technologies, even though it's something that can create an efficiency. It's something that can help educate, get more data. But when they're diving in and getting legal advice, or what's the best home for my client, or what's the best type of product, and not really considering that the information might not be 100% correct that they're getting, not really consulting with others, consulting with their broker, and then just kind of handing that off directly to their clients, that's concerning to us. I'm also curious to know if I can ask you guys if you're hearing more about or have concerns about, AI use with underwriting, or even crypto assets now being allowed as, a consideration when you're qualifying for a loan. Like, just those kinds of things to me are fascinating, and I'd love to hear more from you guys if you have any more information on it.
well,
it's
I mean, there's so much going on that
Yeah.
where do we start? So, I mean, we heard from FHFA Director Pulte that they're really going to expand how we can use crypto. But every time I talk to another um, regulatory agency or law enforcement agency, really, they won't even go into it publicly about what fraud and risks exist around crypto. And so again, I think that we are here to be advisors to our borrowers about what to be careful of and what to be looking out for, et cetera. And we often talk about this when we're teaching is it takes humans to notice things in the automated underwriting and the flaws um in the systems there, because again, we've heard of lenders who are suddenly realizing that all the plumbers are being denied, and then they figure out that the AI taught itself that the first payment default that some plumber had made had taught the system that plumbers were bad. And so we all have to be on the lookout for those kinds of things and really be helping our borrowers. And we've talked about this ad nauseum on here, but maybe not recently, which is you cannot run something through ChatGPT or any sort of AI system without double checking it. It's because it has actually been known to make things up when it doesn't find the answer. And just because it says that something is true doesn't mean it's true. So to be questioning and inquisitive and curious, and to not take the easy route and take things at face value. Kevin, your thoughts?
Well, my thoughts are more back onto the cryptocurrency. The rules haven't changed on that, even though, yeah, we can accept crypto. We've been able to accept crypto now for, I don't know, half a dozen years. The trick, though, is you have to source all the deposits. So it's a pain in the archipelagos because you literally have to go back to the beginning of the account and say, okay, where did this deposit come from? Where did this deposit come from? Where did this deposit come from? And source all those deposits, unless something's changed that I'm not aware of. And the few ones I've had, I got very fortunate in that all of the deposits were large chunks, and I was able to source them to the bank account where it came from, and say, okay, yeah, they had it. They got this big bonus, and they decided to put it into crypto, and I could paper trail that. But like, if there's suddenly oh wait, I just got $100,000 in crypto from China, well, that sets off all the bells and whistles. That's a problem. Or if it came from Colombia or something like that. Okay, well, who sourced it? How to get there? Yeah, that's not eligible money. We can't use that money for down payment, no matter what the administration says.
Well, that may be changing if they change those guidelines. That's the whole point,
Yeah,
is
they would have to do
like
it like the same way, like if I have a $1 million in a Chase account and I just have to go back a couple months and source it. But if they say it, that I'll have to go back a couple months on a crypto account, yeah, that's kind of scary.
the 2 months, I mean, who knows what those guidelines are going to end up being?
Yeah.
They're imminently rolling out, if Bill Pulte, from what he was saying.
Yeah.
So I think that we'll just have to see what that looks like and
Well,
how loose they get, because I mean, they could go to just show 2 months seasoning of this. We don't know. And so how that works. And then also, crypto can just disappear. And so if you don't have any contingencies in your contract, and all of a sudden your crypto is worth nothing and you're on day 28 of your
or like some
contract and you
major,
need to close, you might want to be thinking that through ahead of time, right?
yeah, there's some major basketball players said he lost his password and ID for his crypto account and has no idea how to log into his $1 million that he has there.
That's crazy. But I will say, so I'd be curious what the DRE's position on this, because when we've had the CFPB on prior to, this year, they were very clear that it is our license, and that no matter what we do, or what AI tells us, or what information we're getting from some technology, that we are responsible for the whatever the outcome is of that. Is that your position?
100%. Yes. You are the licensee, you are responsible. I see AI as anything else. It's like a calculator. Yes, it's supposed to be reliable. You're supposed to plug in 2 + 2 = 4, but something might be wrong with your battery and it might look like it's a 2 + 2 = 8, but you have to verify that as the licensee. Same thing with reliance on software programs that are spitting out disclosures for you. Sometimes it might spit out the wrong disclosure, or you uncheck a box on accident, or you check a different box. You're
Yep.
still responsible for reviewing everything that comes out,
We
out
talk
of that
about
software program, and making sure
yeah.
it's right for your client.
We talked about that issue in the class where if someone starts a loan as a Fannie Mae loan and then they switch it to FHA, that the late payment changes, but the software may not adjust it. And LOs have been getting caught on that where, oh, well, we started as FHA loan and we changed all the terms, but they didn't think, oh, wait a minute, the late payment fee changed from 5% to 4%, and it's incorrect on the thing. Now, I don't know if honestly, if the borrower cares if it's wrong on the disclosure, as long as it's right on the final loan papers, the borrower is perfectly fine with it. But some of the loan officers got in trouble for reporting it wrong.
They'll care if they find out. I mean, because
Yeah.
definitely care if they find out. It is one of the things that I think is very surprising when we're teaching and we're talking to loan officers, and some of them also do real estate, is really conveying the fact that even though they are brokering loans and the lender is issuing the disclosures, who's responsible for what the content of the disclosures, Chika? Tell us, who's responsible?
The licensees, yay! Because you're fiduciaries, you're acting as an agent for your client who is the borrower, and you have to act in their best economic interest, which includes making sure they're aware of everything that's material to them when they're going through this transaction.
Right. And I mean, do you know, I mean, is this pretty standard across the country with other DREs? Is it, or can you speak to that at all? Or is
You
it,
know what? I'm not sure on that. I think fiduciary duties change based on types of licenses being, going from lender to broker. But I'm pretty sure that okay, I'm going to get a little bit nerdy with the law, but there's a law called the Field Code. It's in civil code, but it was created by a justice, a judge, Justice Field, and that's why it's called the Field Code. But it talks about basic agency. If you're an agent for another, or if you're acting on behalf of another person, you're an agent, and then you owe certain duties as an agent. And that law has been in the civil code since the 1400s, and I think it got copied across the country because it was such a good basic law to describe what your role is when you're acting on someone's behalf and what your responsibilities are. So as far as I'm aware, if you're an agent across the country, most states use that basic law that you're an agent for somebody, you have special duties, a lot of them fiduciary.
yeah,
Yeah,
incredible.
it's interesting to say that, but a lot of laws get copied, not from state to state, but even country to country.
Mm-hmm.
I've shared that story when I went to Finland, and they're following California law, and I'm like, why are you following California law in Finland? And like, well, because it was the highest and best standard, and we just copied it and pasted it. I was like, it's amazing. No.
Yeah, it is.
It is.
This, when we start going through the different scams, I mean, it is impossible to keep up with phishing versus this versus that. Like in general, like it is a minefield out there. So again, we remind them every once in a while that a number of years ago, the DRE had let us know that there were people who were taking LOs identities and closing loans in other loan officers' names using their license numbers, their likeness, et cetera, et cetera. And so the DRE's advice at that point was Google yourself regularly. And I think that still is a good thing to do, even though it's hard to, and I don't always do it myself.
Yeah, you can sign up for Google alerts and
I
Google.
know you should, but I don't. Okay, Kevin, I would like to, Kevin's gonna teach a class on how to set up Google alerts and
There we go.
Well, now that I said it, I just realized, I did all that way back in the day when they first came out with that stuff, and I actually know a loan officer that had that happen to them, and there was Facebook postings from another company that they just changed the phone number and the email address and said, we'll take, and they got lucky in that their company in their compliance, they reached out to the loan officer like, what are you doing this advertising? You're violating all these rules. And the person was like, wait, I didn't advertise. What are you talking about? And then like, oh my God, there's all these Facebook ads in my name and my contact. It's like, but they use the NMLS number. But they changed the email address, and I probably changed the phone number. And they were just like, trying to get business in that person's name.
Yep. And it's scary. Luckily, we don't hear about it that often, but once
Good.
is often enough
Yeah.
for us to want to caution our licensees. We've got 424,000 of you all. And so we want to make sure that, I mean, you guys are consumers too. We want to make sure you are being protected when you're a licensee. And so, yeah, please let us know because occasionally as well, we will have transaction complaints where someone will say, I worked with so-and-so. And then we contact that so-and-so based on the contact information we have, and it was never them. It was somebody else who had stolen their identity.
Wow.
And it's hard to prove. I mean, at that point, how do you say,
I would hate to have to prove a negative, like having to
yeah.
prove that, oh, that isn't me. I mean, how do oh, God, sounds dreadful. We have a comment here from Catherine. How about fraudulent transfers of real estate by trustee of family trust, specifically transferring the family home into the trustee's own personal trust, then trying to sell the home? Title insured hasn't caught it yet, but it's fraud. Where do I report this? it is, I mean, what a nightmare. Is that something the DRE would cover or?
If it's just strictly that scenario, I would say contact the DA's office, and it probably involves an elder person. So I'd say like social services as well. But if there's a licensee who's trying to help that happen, absolutely report that to us. Or if that person is a licensee themselves, please report that to us. Because there are certain circumstances where even if you're acting as a principal, if you're a licensee of ours and you're doing something dishonest, we might be able to discipline your license.
Oh, wow.
That'd be good.
Mhm.
I'm curious, we have the DFPI on because you were able to connect me with them. So thank you for that. And I was really interested to hear from them that they specifically don't share information from their complaints with other agencies or law enforcement. Somehow assumed that everyone was just like cross pollinating when it came to all of that. And their thoughts were, we want people to know they can come to us and that it won't trigger some other, anything. And so what is the DRE's position on that? Is that how you handle things too?
Um, Obviously, as regulator to regulator, things are different, laws are different, privacy laws are different. They deal heavily with banking as well. So and I'm just guessing, I'm not 100% sure, but if you got a bank telling on another bank, then there might be bigger issues at play. For us, it's typically a consumer that comes to us. Um, Very rarely when it comes to big fraudulent schemes involving criminal activity is it a licensee telling on another licensee. Sorry, telling on's not the correct phrasing, but just to bring it down to the simplest terms. But if we identify something that we think really needs criminal law enforcement attention, we do refer it to them because we want any agency to be able to address the issue with all the tools and resources that they have. So if we see a big scam happening, we will talk to a law enforcement agency and see if it's something that they want to take on. And then it's up to them to decide, hey, this isn't something that we have, it's not up to our threshold or it's not within our jurisdiction. Okay, fine. We did the best we could with that information to see, is this something that, needs to go somewhere else? We'll also tell the complainant, hey, you might want to talk to an attorney because there may be an opportunity to file a civil case because we can't get money back for you, but through a civil case, you can. Criminal, you put the person in jail. Us, we take away the license. So we want to make sure that every kind of avenue is explored to make sure that the bad guy goes away, the person gets their money back, and the license goes away, if that's what's appropriate. So that's kind of how we operate, just again, to make sure we get that wide span of tools and resources provided to that consumer who's harmed.
Yeah, I'm thinking in this particular case, the people that are the victims, the easiest recourse is to report to the broker of record on the listing and say there's fraud involved, and that would stop that transaction kind of cold in its track.
And that's usually why we don't get a lot of complaints, because there's so many people involved in a transaction. And then once an issue is identified, the transaction usually stops. And then people walk away and don't think, oh, okay, I need to report this to somebody because the problem went away.
Right.
But we still want to hear about it because it's something we can address with the licensee that did the maybe bad thing.
Yeah. I mean, we don't need licensees who are doing that kind of thing, for God's sake.
Not business, no.
We have a couple
Wait.
comments in the chat. Peter says that his homeowner's insurance on his rental went from 1,700 a year to 3,500 a month or a year. God, what's wrong with me? And he can't cover the increased cost in the rents. And that is one of the rent control issues that exist, because you can't pass on your expenses when they are increasing at the rate that they're increasing through no fault of the homeowner at all. We have another comment from Joni, who says eliminating low level price adjustments would be very helpful. I mean, that's like a resounding theme within the mortgage industry. Hello, you want to lower rates and increase affordability? Knock out those G fees and those LLPAs, and that will take off what I think the numbers I've heard is, half a point at least. Sort of like going to get gas in California, where it's like, what is it, 65 cents of the gallon that you're putting in is going to gas taxes for the roads, etc. So anyway, it's yeah, the government's very interested in all things other than shutting off their own revenue sources. So it's a little tricky out there.
Hey, I had a quick question, Chica, on we were talking about licensees. There was a story of remember a couple years back there was these guys and gals that were taking real estate courses that turned out they were fraudulent courses. They weren't actually taking a course, but they were getting credit for the NMLS, and they did this for like 3 years. And you guys caught on to this, and then all the other departments of real estate across the country and regulators of mortgage, they came up with a system where, okay, you have to have your license, you have to give it up first, surrender it for a short term while you take these courses, and if you once you've completed all these steps, then we're willing to allow you to come back and practice. And then shortly thereafter, though, some of the people that were licensed in, I believe it was Atlanta said, you know what, we've thought about this and we're changing our mind. If you were licensed in the state of Atlanta, you're no longer going to be licensed. And then all the LOs that happened to be licensed in Atlanta, they lost their license, but that meant they also lost their license in all the other states, because once state revokes your license, and all the states will get message that this license has been revoked there. So a recent case just came up just recently. I don't know if you're aware of it, but it was in Utah, where someone who was under this program decided to expand their license and get licensed in Utah. And Utah said, you know what? We're not going to allow you to be licensed in New York State, or I'm sorry, in Utah. And so they declined their license. And then that, I'm assuming that triggers all the other states that they're licensed in to revoke their license also. Is that correct, or?
That's usually what happens, yes. So if your MLO gets revoked in any jurisdiction, the SAFE Act says that it should be revoked across the country. So we had to phrase our settlements very carefully so as not to trigger a revocation in another state, because in the end, most of the people that were involved in this, we settled with, and we said, take the correct course, come back to us, you get suspended for a little bit, not revoked, you get suspended for a little bit and then come back, and then you'll be all right. So yes, we had to be very careful in how we phrased it so as not to trigger the revocations in other
Yeah,
states.
that was interesting.
Oh, so Kevin, I just want to clarify, did Atlanta secede from Georgia, or is it the state of Georgia that you were talking about, not Atlanta?
It was the state of Atlanta, if I said state of Georgia, sorry.
We got
State of
it. We got
Georgia,
it.
city of
Audrey.
Atlanta. We
First
wanted to go into the country of Georgia, if that's a totally different subject, okay?
First time he said it, then the second, then it was like third or fourth. I'm like, okay, we're gonna have to address this for God's sake. So
I've been to both. I know the difference.
I know you know the difference. Good grief. Okay, so we also have a comment here from Harry, who is now retired from the mortgage business, but can't stop watching the show. God bless him. He said, "What happened to stitches? Snitches needs or snitches." God, let me back up. What happened to snitches get stitches? So
Oh,
Harry's half Italian, so you can tell in his comment.
well, I mean,
So, and it's
I
funny.
guess we're the snitchers in that scenario because we're the ones who are identifying an issue. So
Well,
that's all right.
we were, Kevin, well, maybe Kevin missed this, but my generation, we were really brought up that you don't tattle on people, you don't do this. But we're in a place and time where we've got people doing really egregious things and we see it, and they need to be stopped. And Chica, because I've shared it with you, that my solution for those Reese people was they should have to give back all of their commissions for the time period that they were not licensed properly. And in addition to that, knowing LOs, they also needed to have a look back on their bank statements for the next 12 months after they got their license back, because darn well they were all still doing loans under their friend's name. And as soon as they were out of, DRE jail, they all got their money for whatever closed in that time period. So I'm like, ugh, I was so irritated by that. Because by the way, I was working 7 days a week during that time, probably donating, I don't know, 40 hours a week, plus what I was doing in my own business to the industry through my, when I was president of camp, etc. And so I was pissed. I'm like, it is not fair that they got to make all of this money and then I was too busy. No. Anyway, I'm controlling my mouth and not say what I really want to say, believe it or not. So let's move it along, shall we? So speaking of things not to do, as I am reading that MBA, Mortgage Bankers Association, is saying that the market share of adjustable mortgages has gone from 7% of the market to 13% of the market as we've watched the yield curve, straighten out a little bit. That's 1 out of 7 or 8 mortgages. We are hearing people at the national level say that the way you should frame this is to, make sure you're letting your clients know that I don't even want to say it. I call it the other F word when I'm talking to our students when we're teaching NMLS. So you cannot, I repeat, you cannot say the word fixed when you are describing the term of an adjustable arm, whether it's a stable rate for 5 years or 7 years or 10 years. Chika, anything else you'd like to add to that?
If you use the F word to describe an arm with us, I would say it is misleading and misrepresentative. And it's been a while since I've looked at our mortgage laws, so forgive me, but I thought the statement on subprime lending and all those kinds of non-traditional loan disclosure type things were still in place. So if you're, arms do scare me. I have to say, I want to make sure, and this is not for anyone that's listening to this, because I know everyone listening to you guys are doing the right thing. So it's all the people that aren't, that are putting their clients in arms and the clients don't belong in them. That scares me to death. But I'm really, really hopeful that they're providing all of the appropriate disclosures to let them know what an arm is, how the payments can adjust, and when they adjust and what it's going to look like. But yeah, I get very nervous when you describe that someone's encouraging someone to call an arm a fixed rate loan. So
Yeah, just to
The
remind
the other concern I have with arms right now is, despite the fact the Fed lowered rates just this last week, we are actually in a rising interest rate environment for the foreseeable future. There may be a Fed drop here and there, but everything is in the economy is showing that we have a budget deficit that's not recoverable from, and the only way that that's going to be resolved is eventually the rates are just going to keep rising and rising until they break the system and the economy gets fixed, and then you'll start seeing lower rates and the rates starting to trend lower. But all the statistics I'm seeing is we are in a long-term, like 20-year plus time of rates are going to be rising. And if you can grab this low rate right now, grab it, because you're not going to be seeing lower rates than much lower than what we're seeing right now.
yeah.
Well, Mary Sunshine, thank you for that little bit of
Yeah,
joy.
great news.
It is, I can segue from that right into the summary of economic projections that we got from the Fed. The expectation is that the unemployment rate by the end of the year will be 4.5%. They're expecting core PCE or PCE. I think I should have written PCE at 3.1%. I mean, cross your fingers. This Friday will be very interesting. GDP to be at 1.6%, which is not great, but not recession. And that the Fed funds rate to be at around 3.6 with 2 more cuts this year. So the dot plot from the Fed for the next 2 meetings, the last 2 meetings of the year, is as follows. One person wants to, like Kevin, hike rates. 6 of them don't want any more rate cuts. 2 want 25 basis points more in cuts. 9 of the Fed governors want 50 basis points more in cuts, and 1 wants 125 basis points in cuts. Any guesses on who that might be?
I think someone that works in the administrative office also on a side hustle.
Maybe them, yes, perhaps them. So anyway, yeah, the conference board leading economic indicators for August was down 0.5% at the 11-year low. So, not feeling totally great, but they are not forecasting a recession. So I think it's interesting because we're hearing less of the R word. So we have a lot of R words, F words, Chica. I mean, back in the day, a few years, what was it, 3 years ago, Kevin, when they were started talking about recession, and I got so sick of it that I suggested that every time somebody said the R word, we take a shot. And then we figured out that if that were the case, we'd probably be on the floor before our hour was done on Tuesdays. And so we abandoned that idea completely. And here we are. So it'll be interesting to see what happens. Another thing I wanted to bring up is for the people on this call, you know this. Mortgage rates don't follow Fed funds rates, right? But we need to remind everyone else. And this became glaringly apparent. I have a transaction with a realtor who keeps offering mortgage advice and rate advice, and she's wrong 100% of the time. So the first thing she told the borrowers, and I think I talked about this, was go to your go to this credit union because they're offering 0% rate bridge loans. And I'm like, wait, what the what? Give me their phone number. And God bless my clients who call me first to run, let me know. And so I call, and sure enough, not only was it not 0%, it was almost 10%. And yes, you can defer your payments for 3 months, but do the math on over $2 million in a bridge loan, et cetera, right? And by the way, the whole essence of a bridge loan is going to be that you are leveraging your equity in the other property too. So probably that loan amount would have been more like 2.7. So again, do the math, and then you're deferring these payments for 90 days. Can you freaking imagine? So completely wrong, right? And I am very sweetly and delicately, as you know, I am trying to navigate this without making the real
Without dropping an F word.
ding dong. Okay, so then their next, what'd you say?
I say without dropping another F word.
I don't know what, yes. I may or may not call Kevin on occasion going, oh my God, did you hear? You can't believe. Okay, so then their next move was, so last week, I locked the borrowers on Monday because I was concerned because do you remember last year what happened to mortgage rates when the Fed cut after it had been a while? Yeah, they went up like a steady march to 8%. So I didn't think that was going to happen, but I was concerned and I just didn't want it to move anymore. So we lock it in. I'm feeling pretty good about this. So Wednesday comes around, sure enough, rates start to go. And Thursday comes around, rates are still going. And I get a text from the borrowers, hey, so-and-so said that the rates are down and we should get a better rate. And I said very carefully, I explained, here is the deal. And so again, and then I said, do you think that I should let the realtor know? And they said, one of them said no, one of them said yes. Well, I saw the yes first. So then I sent a very sweet, I swear to God, it was sweet, text to everyone saying, hey, good thing we locked because rates have been up since the Fed funds, which are not connected to mortgage rates, went in, anyway. My point is, us being the experts, you knowing what you know, because we do this every week and you are the expert in the industry, it really does pay off. Because here I've got, borrowers who know that I am watching, they know that I know my stuff, and it absolutely helps keep everyone on track. And then, I can help try to guide the people who think they know something they don't. But I would really like people who don't know what the hell they're talking about to stay in their lane. Just personally. So
That point aside for just a moment, but going back to the positives, I agree. I think to all of the licensees listening, show your value as a real estate, a mortgage, whatever professional it is. You have
yeah.
a license for a reason and show your value. So Audrey, you provided that information to your clients and helping to educate the other licensee on the other side was
I
obviously supremely beneficial, but I think people often forget, like, I'm not just here to, help this and do this. You're here to show your value as to why you should be involved in this transaction, why you should be a licensee, why you should be an agent in fiduciary duty. So I think that's a great story.
So somebody's asking where the jobs report is, and it's not due until October 3rd. So that's what oh my God, that reminds me though. Okay, hang on. So as the Fed speaks, there were 10 Fed speakers scheduled for this week. 10. That's a ton. Okay. So Austin Goolsbee, who is the Chicago Fed president, he said that they have created a new um uh, you know, God help me, Kevin. The please read my mind. You
New.
know how they have like the BLS jobs report and the
Okay,
JOLT,
yeah.
the ADP, they have a new
New statistical report that they come up with.
thank you. Okay, it's going to be called the churn. They couldn't have come up with the worst acronym for as far as I'm concerned. Chicago Fed, of course, he named it after them. I don't blame him. He figured it out. Chicago Fed unemployment rate nowcast, and it will be released twice a month. So now we have even more jobs information to look forward to. It's supposed to be more real-time data. It's going to look at BLS, ADP, job posting sites like Indeed and Google Trends. So again, I mean, it's going to be a little subjective, I would imagine, based on somebody analyzing job postings. But you know, I mean, you gotta give it to him. I don't know if it'll be good or bad, but at least he's trying to think of something because I was very excited this morning. Okay, so anyone who listens to this show know that I harp on BLS. I have for decades. They drive me nuts, right? So anyway, so I have been a couple months ago, Rob had said, you should have someone on here from BLS. And I said, great. And he goes, I'll try and hook you up. Anyway, bottom line is I found this guy and I talked to him this morning and he's going to come on at the end of October. He used to work for BLS and he's a labor economist. So
So it's all his fault.
I'm super excited about having him on. But because I'm like, okay, we need different ideas, different solutions, different, and also for economists to understand the ramifications of decisions being made based on faulty data, and then it impacts our borrowers for the next 30 years or 5 or 10 or whatever they have their loan. So anyway, so I'm excited about that, but we'll see. I mean, we've got to move the needle somehow. And whether or not this ends up being an index, that's what I was looking for. That's the word. Um, anyway, if this thing ends up being good from Austin Goolsbee, great. If not, I mean, he tried. I'll give that to him, right? I mean, I think we just need to try some new things because, the old stuff is not exactly it's not working, in my opinion. Okay. So, Chika, I'm curious to know if you have an opinion that you could share, and maybe you can't or won't, but we'll give it a shot. So, Compass Real Estate is buying anywhere. I mean, this is a huge, huge acquisition. They're going to end up with 340,000 agents across the country. Do the regulators have any comment on this?
No, but what I will say, well, because I never want to talk about individual companies or practices or
Okay,
business models,
fair
but
enough.
generally speaking, we have regular conversations with trade organizations about broker supervision. So and everyone wants us to approach it in different ways because they think the small guys think the middle guys and the big guys are doing it wrong. And the big guys think the smaller guys are doing, and everyone's a little bit different in their approach. And so it's hard for us to come up with a law or regulation that is one size fits all. Sorry to use the pun, but one size fits all. And then when it comes to the issues that we see, compliance and regulatory action, I mean, they span from the smaller to the mid to the large brokerages. And so it's not like the small brokerages have the most issues or the large brokerages have the most issues. It's all across the board. So we can't definitively say one is a problem and one is not, or the middle ones are good. It's just all across the board, people are doing good and people are doing not so good things. But that being said, it is something we're aware of as, just expanding brokerages and wanting to make sure that large brokerages and all size brokerages have the broker supervision practices and policies in place to make sure that all of their affiliated licensees are acting appropriately.
I would love to see someone supervise 340,000 agents. I wonder how you do that. They must be magic.
The law allows for, you've got the broker, and then you've got, branch managers and division managers. So there can be a tiered kind of supervisory system.
Yeah. Okay. Well, we'll see how this works out. I just thought it
There's an
was so
interesting comment in
interesting
the chat.
in the NAR settlement, which is so concerned about so many things, which may or may not be valid. The all of a sudden we've got this, which I think is interesting. Brandon says Monopoly is only good as a board game. So interesting. Someone else just pointed
Hey,
out that Compass hasn't turned a profit. I don't think I knew that.
I think they've got a lot of money behind them somehow, somewhere. There's someone's making money.
Yeah.
Hey,
Hey,
Chika, since we're in the middle of or starting really the beginning of NMLS renewal season for loan officers, do you as the Department of Real Estate, do you get a report on who's as people start completing their exams, or do you only get the reports as they pay their renewal fee?
I don't know the answer to that. I believe we get information once everything's been completed. So NMLS kind of takes care of all the requirement stuff for us, and then we get the information all kind of bundled in a package, I
So,
believe, but don't quote me on that.
so funny story, and I've shared this before on the show, but NMLS has revamped their website. It's a lot cleaner, easier to work with. And they had an hour and 15 video and webathon or webinar on all the changes they've made to save you 5 minutes in your renewal of your thing. And I did the math. It's like, it's going to take me 15 years to recoup that hour and a half that I spent watching their video. I can save 5 minutes when in fact, I could save the 5 minutes without ever watched the video on how to save my 5 minutes, because you just click in. It's just so simple now. So those loan officers that are going in now, it's a lot easier, cleaner. You can go in. It's a lot easier to maneuver through the website, which is great.
well, I would just like to remind people too that I hear complaints about how hard it is to work with their website. And I, for many, many years, just picked up the phone and called them, and they were so helpful. I mean, patient. I mean, if I had to deal with someone who sounded as dumb as I sound when I call them, I would have to be medicated. So bless them, because I couldn't do that job, and they're really great. So just call them.
Maybe they were.
Maybe they were. Exactly. So
No, they do have great staff at NMLS to help
they
users,
really do.
even us, even regulators.
Oh,
And they haven't all been let go, despite rumors.
nobody thought that. Okay, so we have noticed that lenders have ruined our crystal ball competition that we have enjoyed having, where we had people weigh in and guess what the new conforming loan limits are going to
Oh,
be.
no. They haven't ruined it.
And they're coming out already. I saw it, started seeing
Yeah, but it's the wrong number.
and they're not the same, by the way. So we've seen a few lenders come out with new conforming loan limits. They're different from lender to lender. It's crazy. It's September, for God's sake, people. I mean, it used to be that, well, and I think they still do. Fannie releases them right around Thanksgiving-ish.
Yeah.
Now we're at the like mid-September, and we're getting them preempting this. And it's hard to imagine that they're going to change a whole lot, really, because we haven't had dramatic increases in prices over the last year. So I don't really know what the point is. Is anyone excited about this? And I should like revamp my thinking, or is it as pointless as it feels to me?
So we've done this before when we've done the contest of guessing what the new conforming limit will be. And I even dug in. I thought I had the whole system down to a science, and no, I was off by the way they calculated it. So
Close. You're usually
I'll be close. I'll be closer than the new numbers that it came out. But the numbers are within $50. It's like
yeah.
they're
I just
$50 increments. So what it is comes in at exactly, who knows?
Yeah.
It definitely won't, most likely will not end in a 000. Rarely it is. I think it was stuck there at 417 for a
10
long
years.
time, remember?
10 years.
Yeah, crazy.
Okay, so a couple things. Fannie Freddie market share is the lowest it's been in 18 years. I thought that was very interesting because I keep asking for these numbers, and finally I'm seeing something. So in the second quarter, and this is from IMF publication, they accounted for 51.1% of all new mortgages, which I thought was fascinating. It's the lowest market share for the GSE since the second quarter of 2007. It was more pronounced with Freddie than with Fannie. And anyway, I just thought that was crazy because I keep thinking it has to be the case. I mean, I'm sending 0 investment properties to the GSEs. I do all of those non-QM. I am, if
Second homes probably too.
what?
Second homes.
I haven't done a lot of second homes.
I haven't done a lot either, but
Jumbo. Well, obviously jumbo. If I can do something not, well, anyway, long story. Bottom line is I've really adjusted where I'm sitting my loans, and I know I'm not alone. So yeah, crazy, crazy, crazy. Okay. So also, I got this note today from a lender, and I wanted to talk about it because it says, important update, loan servicing just got sweeter. So this lender is now going to retain and service all their loans through a particular servicer, whatever. They are also requiring their borrowers to sign up for ACH payments. That means that when they go to sign their loan docs, they have to fill out the form that says, we're going to have an auto withdrawal out of our account every month. And I'm going to say that as an LO who had a borrower like decades ago, do that in escrow and then found out they were in foreclosure 3 months later because they never noticed that nothing had been taken out of their bank account, which had $1 zillion in it. I haven't let my clients do that since. And so I read this thinking, not a chance. And so just be on the lookout for this, guys. If this is going to be something that some of these lenders want to push, I'm out. And so, but at the very least, you want your borrowers to really, really be educated on the ups and downs of what can go wrong with that, and to make sure they're hyper vigilant, especially around their first payments, making sure that the ACH is working, but also making sure they're checking their account every month and that it is in fact coming out. Don't take it for granted.
yeah, that's I had the one time I had a late payment is because there was an error on it and it just didn't come out. And I was like, I just assumed it comes out every month. And all, what do you mean? What do you mean it didn't come out?
Yep. You cannot. So we've had a couple people post the new limits, but again, I've seen different amounts at different lenders, which is why I'm not telling you what they are.
And those will not be the final numbers, guaranteed.
Okay. And then there was one other, I saw this, caught my eye, as fraud is big time in the headlines right now. So this happened over a number of years. They didn't just do a little bit of fraud, they did it over and over again during a period of time. A NASA scientist, both the husband and wife worked for NASA. One was a contractor, one worked for them directly. They were forging pay stubs, plus they said that the property they were buying was going to be a rental property. Apparently it wasn't. They also claimed identity theft. Are you ready for this? For $276,709 in debts. So they've pled guilty to fraud. They have to pay restitution in the amount I just said. They're going to be sentenced December 18th, and they could be fined up to $250,000 and 5 years in prison, plus lose their home. So as we're watching people become more and more aware of things like occupancy fraud and, but again, I mean, you're a freaking NASA scientist and you're forging pay stubs. What the hell? And I think they did some funky stuff on some bank statements. I mean, they were really going for it.
Wow.
And
if you're going to do it, go all the way.
Yeah, right. So this is being caught. And I think it's interesting because it's 2025 and their first offense, it sounds like, might have been 2017, then it was like 2019 and 2021. So it's not like it just happened 2 months ago. They're going back and they're finding this stuff and they are prosecuting people. So it is a cautionary tale, in my opinion, for our borrowers, for our referral partners, and to the referral partners who are like, well, if you won't do it and commit fraud, the guy down the street will. Keep track of who closed that loan and report their ass to Chika, please. I would really appreciate it. I thought it was interesting that Cotality's National Mortgage Application Fraud Risk Index, which we've never talked to Dr. Selma Hepp about, but it exists. 1 in 116 mortgage apps had fraud in them in Q2 of 2025. That seems like a huge number. Okay, that's it. That's all I got. So, Chika, on that bright note.
I mean, let me just say, I would love to see a world where there are no scams and consumers are so aware of all of their rights and licensees are handling transactions perfectly where our enforcement team doesn't exist. But we do. We will probably continue to have a job for a very, very, very long time. So yes, scammers keep us in the enforcement business and business. Not that I like to see that, but my North Star is we do such a great job as a regulator of educating consumers and licensees that no one gets harmed.
That's right. You're so much nicer than me. I'd like to burn them all at the stake, but anyway, thank God you're in charge. All right. Well, with that, everyone, there are so many loans to close, and we have so many options for closing loans, doing it the right way that is legal and no one ends up in jail or
Yeah.
in a headline or losing their license or just being a horrible person. So use them, use all those options. A lot.
You'll sleep better at night.
Yeah, exactly. So hey, I just have one last comment. So Harry, he says Chika is always great to have as a guest speaker, and we would like to agree 1,000%. And thank you so much for being here.
Thank you for having me always. Thank you.
All right, have a great week, everyone. Go get some loans and close them.